Welcome back to your ultimate pit stop, Piston Pundit. For more than a year, Donald Trump has dominated headlines with oversized promises, trade resets, energy windfalls, and bold claims of remaking global markets. But in early 2026, one pledge stood above the rest, reviving Venezuela's collapsed oil machine and unleashing a wave of cheap energy worldwide. After the dramatic capture of Nicolas Maduro, the White House framed Venezuela as the centerpiece of a second-term energy strategy. Yet when campaign stage optimism collided with valves, pipelines, and balance sheets, reality pushed back hard. Let's break down the mechanics, the risks, and why this deal stalled before it ever reached operating temperature. After Maduro, the geopolitical shock that reset expectations. The story opens with a geopolitical shock that rattled markets and diplomats. In early 2026, a U.S. military operation led to the capture of Venezuelan leader Nicolas Maduro. Trump quickly framed the move not just as a political win, but as an economic reset. Venezuela, holder of the world's largest proven oil reserves, was suddenly pitched as open for business. American companies, he argued, would return, rebuild fields and refineries, and unlock vast wealth. Yet decades of sanctions, corruption, and mismanagement had crushed the sector. Output fell from over 3 million barrels per day to well under 1 million. Pipelines leaked, refineries failed, infrastructure rusted, and skilled engineers fled. Restarting an energy industry isn't an executive order, it's a long process. $100 billion promise. Reality hits Venezuela's oil fields. Trump labeled the Venezuela push the crown jewel of his energy agenda, floating a bold figure: $100 billion in U.S. investment. The promise sounded simple. American capital meets Venezuelan crude, global prices fall, and energy dominance returns. On paper, it was a powerful pitch. Inside the industry, however, engineers and executives saw a very different schematic. Venezuela's heavy crude demands specialized extraction methods, upgraded refineries, and steady electricity, none of which currently operate at scale. Years of deferred maintenance left wells damaged, surface equipment unusable, and logistics chains broken. Even under perfect conditions, ramping production is measured in years, not press cycles. The idea of snapping back to multi-million barrel output ignored reservoir decline, workforce shortages, and the sheer time it takes to rebuild a national oil system from near scrap. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Now let's shift gears and steer towards our next point: why oil executives hit the brakes on Venezuela. The plan reached a turning point when Trump gathered roughly 20 top oil executives at the White House. The expectation was alignment. What he got instead was resistance. Industry leaders warned that Venezuela remained structurally high risk, regardless of political change. One executive's blunt assessment cut through the room. Under its current framework, Venezuela was effectively uninvestable. This wasn't ideology, it was institutional memory. Past government seizures wiped out billions in assets, contracts were retroactively altered, and capital controls trapped profits. Oil projects aren't short-term trades. They're 30 to 40-year commitments involving massive sunk costs. Without confidence that assets will still be legally owned decades later, even the most optimistic projections collapse. For executives accountable to shareholders, political enthusiasm couldn't override operational exposure. The legal trap: how risk killed investor confidence. More than rusted steel or idle rigs, Venezuela's legal environment proved to be the fatal choke point. Investors fear courts that bend with politics, regulators without independence, and reforms that can be undone overnight. Even with signals of partial market opening, the credibility gap remained wide. Oil companies don't price hope, they price risk. Executives also worried about reputational fallout. Pouring billions into oil fields while everyday Venezuelans remain impoverished risks optics of extraction over reconstruction. Without transparent laws, enforceable contracts, and clear ownership protections, capital stays parked. The mismatch between political declarations and commercial fundamentals became undeniable. In the end, the deal didn't fail because of ideology. It failed because the system couldn't pass a basic mechanical inspection. Instant oil reset myth: why markets didn't budge. A major flaw in Trump's narrative was the belief that Venezuela could rapidly reshape global oil markets. Industry leaders pushed back immediately. Yes, boosting output by 100,000 to 200,000 barrels per day is achievable with targeted repairs and modest capital. But adding a full million barrels per day is a different equation entirely. That scale requires sustained investment easily exceeding $100 billion, plus years of rebuilding wells, refineries, pipelines, and logistics. Even if production rose, the short-term impact on prices would be limited. Global oil markets are driven by OPEC policy, U.S. shale output, geopolitical risk, and demand trends, not a single country's recovery. Analysts were clear. Without deep structural reform, Venezuela's comeback wouldn't meaningfully move energy prices in 2026 or the near future. Chevron's limited bet: cracks in the grand plan. When pressed for tangible proof of momentum, the administration pointed to one example. Chevron suggested it could lift Venezuelan output by roughly 50% over the next 18 to 24 months. In industry terms, that's meaningful. But it was nowhere near the promised surge. No swarm of rigs, no $100 billion capital wave, no instant oil renaissance. That contrast exposed the core flaw. Political leaders can announce partnerships, but they can't command capital allocation. Oil companies operate on risk models, not rhetoric. A single miscalculation can erase decades of returns. From a fiduciary standpoint, restraint wasn't rebellion, it was responsibility. Chevron's limited move highlighted just how wide the gap was between headline ambition and boardroom reality. Politics versus reality. Engineering, law, and oil don't bend. By the time Trump returned to Washington, frustration was evident. Publicly, resistance was minimized. Privately, irritation grew toward executives unwilling to mirror political optimism. But oil doesn't respond to pressure tactics. It responds to metallurgy, logistics, contracts, and confidence. Even Exxon left the door slightly open, signaling interest in assessment teams if credible legal reforms emerged. Still, in an environment dominated by loyalty tests and sound bites, cautious realism was treated as obstruction. That dynamic sent a warning signal to global investors. When sober risk analysis is framed as disloyalty, capital doesn't rush in, it waits or it walks. Verdict: political theater collides with energy reality. This episode underscores a hard truth every engineer and investor understands. You can declare a deal historic all you want, but without structural integrity, it fails stress testing. Venezuela's oil future isn't finished, but it's far more complex than any press conference suggested. Rebuilding a national energy system requires time, enforceable law, technical expertise, and capital moving in sync. For now, investors are hesitating, executives are modeling downside risk, and the grand vision sold to the public is quietly shrinking. Venezuela may eventually reclaim relevance in global energy markets, but it won't happen on a political timetable. Power can seize a moment, but only credibility sustains momentum. Now, what do you think? Can Venezuela ever regain investor trust without sweeping legal reform? Did politics oversell what oil infrastructure can realistically deliver? Would you risk billions in a market with this history? Drop your thoughts in the comments, and thanks for stopping by the pit lane with us. If you want more deep dives like this, subscribe to Piston Pundit so you don't miss our next vehicle updates and upcoming breakdowns. You can now check out any of the videos on the screen. There's plenty more to explore.